Should you buy a house now? Deciding whether to purchase a house involves evaluating the current housing market, mortgage rates, and your personal financial situation. Here's a detailed breakdown to help guide your decision. 1. Current mortgage rates. As of early 2025, 30-year fixed mortgage rates have slightly decreased but remain elevated, hovering around 6.87%. Analysts expect rates to gradually decline, but likely remain above 5.9% to 6.5% through the end of the year. What this means: higher mortgage rates increase monthly payments, reducing affordability. A potential decrease in rates later this year could provide better opportunities. Second, housing market trends. The housing market has experienced steady growth, with median home prices continuing to rise in most regions. For example, in cities like Los Angeles, home values have increased by 1.4% in the past year, with forecasts predicting continued growth through 2025. Key takeaway: rising home prices mean waiting could result in higher costs later. Supply remains limited, which may sustain price increases despite higher mortgage rates. Third, economic outlook. The broader economic environment plays a crucial role in the housing market. Projections suggest inflation is stabilizing, which may lead to slightly lower mortgage rates later this year. Job market remains strong, supporting housing demand in many regions. 4. Personal financial considerations. Before buying, consider down payment. Do you have enough saved for a down payment and closing costs? Credit score. A strong credit score improves chances of lower interest rates. Debt to income ratio, DTI. Lenders prefer DTI ratios below 36%. Emergency fund. Ensure you have 3 to 6 months of expenses set aside after closing. 5. Long-term plans and stability. If you plan to stay in the home for 5+ years, buying now may make sense, especially if home prices continue to rise. If you expect to move within a few years, it may be better to wait, as the transaction costs and potential market fluctuations could outweigh short-term gains. 6. Buy versus wait. Decision matrix. Consider buying now if you have financial stability with adequate savings. You're buying for the long term and don't mind temporary high rates. Home prices in your desired area are rising faster than you can save. Consider waiting if your budget is stretched with current rates. You're unsure about your long-term plans. You believe rates will drop significantly within the next 12 to 18 months. 7. Additional insights. Fixed versus adjustable rate mortgages. ARM. If rates are expected to decrease, some buyers choose an ARM to benefit from lower initial rates. Refinancing potential. You can refinance later if rates drop significantly, but factor in refinancing costs. Conclusion: whether to buy a house now depends on your financial readiness, long-term plans, and market expectations. If you're financially prepared and plan to stay for several years, buying now may help lock in current home prices before they rise further. However, if high mortgage rates strain your budget, it might be prudent to wait and monitor market conditions through late 2025.